The Reserve Bank announced the decision to cut the overnight cash rate from 25 basis points to 10, the targeted 3-year bond rate from 25 to 10, and the term funding facility where banks draw down money from the Reserve Bank from 25 basis points to 10. We expected all of those results. They also have decided to cut the rate that the banks are paid by the Reserve Bank when they deposit with the Reserve Bank from 10 basis points to 0. And they've also announced a quantitative easing program. So they'll now be buying 100 billion of bonds between 5 and 10 year maturity. And in addition, they'll put money aside to target the 3-year bond rate. So that's more than I was expecting. So it's a more aggressive approach. And the governor also indicated that they're prepared to do more if necessary. And the key driver there will be the outlook for the labour market. Those purchases are targeted to be completed over between now and June at a rate of around $5 billion a week. So the key thing for me was that the decision on the quantitative easing was very much around putting downward pressure on the currency, but also the cutting of rates will also support the housing market. And the governor made a very important point. He said that he doesn't fear a housing bubble at the moment. He feels that house prices have been fairly flat for some time. He saw rising rents, falling rental rates, and believes that further stimulus to the housing market from these rate cuts would be welcome. Westpac's forecast for some time has been once we negotiate this soft patch in the economy in the middle of next year, that house prices will be lifting by around 15% over the course of 2022 and 2023.